Welcome back to another Week in Review. I'm Logan. I'm sitting here with Quint. Quint, we just got news. It's 2:30 on Friday. We just got news that Russia seems to be invading Ukraine.
What a day. So interesting behind the scenes, how the sausage is made. Walked out of a meeting, went back to the computer. Markets seem to be in turmoil a little bit. Obviously caught the headline that Putin apparently is making his plans known, that they are preparing to invade. So interestingly enough, Logan, I'm not so sure how much the market has been pricing this in. We've been so focused on the Fed and interest rates, which we'll talk about in a second, I know. Yet everybody knows that Putin has been lining up on the border of the Ukraine. So, and oil has been reflecting that. You know, oil has been soaring. It's spiking on this news today. So it'll be interesting. It's going to take some days to digest. I never like saying this, but I will say this, that historically, war has been good for markets. I mean, that just doesn't feel right saying, right? That we're going to have casualties, we're going to have young men and women fighting, and it is good for markets. Maybe that's not the time. Maybe that's not the case this time. I don't know, but traditionally, it has been. So yeah, markets. That's the volatility. We're going to move very quickly from the CPI headline numbers that we got on Thursday to headlines about Putin, invading Ukraine. Now, that's going to dominate the headlines all weekend. I would suspect that people get very fearful coming into Monday. I would dare say that the roller coaster that we're seeing here in the markets more than likely transpires into further volatility come Monday or Tuesday. Would have liked to not, been so, I guess, correct on this volatility. I mean, nobody likes volatility.
Right.
We're getting it. We're getting it from a variety of different areas for a variety of different reasons. But the strategy doesn't change, right? The strategy doesn't change. It's why our portfolios own things like gold. So the news hits today, and what equity markets fall, gold soars, right? So that's why we have it. We have it for inflationary pressure. We have it for geopolitical pressure, et cetera. We have cash. We have some cash on the sidelines. Why? Believe it or not, and it's going to be hard to do, there's going to be opportunity. There's going to be buying opportunities here. So, that's why we have some cash. Would love to have more, right? In a time period like this. But no, nothing changes, no knee-jerk reactions with the strategy. But it is going to be very fascinating to watch. An area of the market that changed dramatically on this news, which was totally different than 24 hours ago, was the Treasury market, the United States bond market. So as money has moved out of equities, it's moved into bonds. So you think about people selling, and sometimes it's computers and institutions, but they quickly get this news, quickly sell stocks, buy bonds. So if there's a buying pressure for bonds, think teeter-totter, right? Remember back from class, bond prices on one side, interest rates on the other. So as bond prices go up, interest rates go down. So what we've seen in the last 30 minutes is we've seen a spike in bond prices and a decline in interest rates. Why do we care about that? Why is that interesting? Well, 24 hours ago, we saw the opposite. We saw interest rates go up, bond prices go down. Why? Because of the Fed and the CPI, right? So let's shift gears a little bit. Yes, the Russia news is going to dominate headlines all weekend. There's going to be volatility coming into next week. I don't think this is going to last too long in the marketplace. I just don't. We'll see. It depends on who's drawn in, depends on the saber rattling across NATO and other countries. But I don't necessarily think this is going to be a dramatic demise for the market. It will create fear, no question. But in fear and high emotion, there's often a great opportunity. That said, what's been dominating the headlines, though, however, is the Fed, the CPI. So CPI came out on Thursday. The headline print, year over year, this is very important, 7.5%. Massive number, highest since 1982. It's important to say year over year because the way headlines have been being written, many people are seeing that as 7.5% for the month.
Right.
That's not the case.
Yeah.
It's January to January. Monthly, it was 0.6.
Mm-hmm.
Now, that still is high. Okay, let's not poo-poo that. That's pretty high. However, this is what's interesting. When you dissect the CPI, it's all broken out. You can do this. You can go to bls.gov. Bureau of Labor Statistics is the branch of the government, and they break this out. And there were some clear standouts in the January number. One was fuel oil.
Mm-hmm.
Okay, so look around, right?
Yeah.
The oil prices have been skyrocketing. We're paying more at the pumps. Why has fuel oil been going up? Well, the Russia-Ukraine challenge, right? The geopolitical concerns. What's going to happen with one of the world's largest oil producers going to war? Oil has been going. It's above 90, 92. I think it's probably not 95 now. So that has been creating pressure within the CPI. The other one, which was interesting, 2.4% month over month in airfare, airline tickets. Well, I flew a couple weeks ago, packed. I mean, giving out tickets so packed. Like, we got to bump you so packed. Well, that's the reopening. That's people traveling. Right. Everything else, though, was pretty much in line with expectations, but those outliers. So what was fascinating about Thursday, and you kind of got to get into the weeds a little bit with this, and I don't encourage everybody to do this, but the market was flat. We got the CPI at 830. Market took a dump, right? I mean, down 1.5%, was garbage, was terrible. But what I suspect happened, people looked through the numbers and said, wait a second, this has nothing to do with monetary policy, the Fed. This doesn't have this has to do with oil. This has to do with airlines. The market recovered. Went all the way back up. It went green. You remember? It was green for the, I mean, it was like big sell-off. And by the time you got a second cup of coffee, it was green again. And that was interesting because it gave the market a sigh of relief. Like, okay, maybe this is priced in. Maybe we realize that CPI will come down as we sort of get through supply chain, et cetera. But then James Bullard, the president of the St. Louis Fed, came out about 11:30 and said, and he's always kind of been the headline guru, but he came out and he said, we should raise 50 basis points and maybe 100 basis points by March. And by the way, we should have the ability to raise rates intra-meeting. So basically anytime. Well, the market, after probably people looking through going, wait a second, oil, airfare, this is okay. This isn't terrible. Let's not overreact here. Market up. Then the market said, well, if the Fed's going to do that, I'm out, right? The next thing you know, the market goes all the way back down. And the reality is, here's the reality. What have we done? Not much anything. Yep. Right? We're a step back. We got our popcorn. I mean, it's not fun when the markets are volatile like this, but to try to game it, to try to kind of get in there and, I'm going to do this, I'm going to change this. I mean, that's crazy. I would not do that. It's a big picture move. Nothing really to do. Again, hopefully, at least our clients should be allocated appropriately, well diversified, long-term planning. And I don't mean to poo-poo declines. Nobody likes losing money, but it's a long-term objective, a long-term view. And I will say, for the first time in a long time, this should create some incredible opportunities. Yeah. Got to keep an open mind and objective about it.
The one thing I just want to mention, because you mentioned war is good for markets, this doesn't necessarily mean that we're going to war. This news that just came out.
No, but I mean, let's face it. I think what Americans are going to be concerned about is Russia invading, China, joining Russia, or at least supporting Russia, the Ukraine and NATO, our allies, trying to support the Ukraine, and us being drawn into a war. Right. As a parent of 14-year-old to 12-year-old. It's been a long time in this country that we've had a draft. And I'll tell you, the first thing I thought of when I saw trucks and military personnel moving to the border of Russia and Ukraine was, I really hope we don't go to war, and I really hope we don't have a draft. The landscape in America has changed dramatically from all the, 18-year-olds signing up to go to war and go to Vietnam or go to World War. I mean, the Great American Generation, World War II. My grandfather, who fought in Iwo Jima, he signed up at 16.
Wow.
His mother forged his date of birth because he wanted to fight. I think if we were drawn into a world war, I'm not so sure we would have that patriotism. I don't think we have that. So again, as a parent, my thought is, holy cow, what if we have a draft? I mean, I don't, it is what it is. We'll see. But no, we're a long way from that, a long way. But that's where people are going to go. That's where their minds are going to go. They're going to go to war, world war, conflict. What's going to happen? They're going to extrapolate.
Yep. Okay. So after that cheery note, you sent out some news this last week.
Oh, yeah.
And I think we should just discuss that a little briefly.
Great idea. Oh, so if you haven't yet read the newsletter that we sent out this week, please do so. And as I mentioned in there, during times of heightened volatility, we're going to write, right? We don't write just to write. We don't do these just to do these. We do these when there's times to educate. But in the midst of all the chaos and pandemonium, it looks like, and there's still a lot of, hoops to go through and so forth, but it looks like after 20 plus years of on our own paving the course, it looks like Joule Financial is going to partner with a larger firm, and I am very excited about this. And we'll, I'm sure, dialogue about this more. We'll write about it more. We're fielding questions from people, and that's perfectly fine. But a couple things I think is important to note. First of all, you can do your own due diligence, which is quite fun. But the parent organization, Kestra with a K, Kestra Financial, based in Austin, very large financial organization, and they have a subsidiary called Blue Spring Wealth Partners. Blue Spring Wealth Partners has been going around the country identifying rapidly growing RIAs, registered investment advisors like ours, partnering with them to help them with economies of scale. Now, that's a buzzword that just means helping them with growth and future expenses. And the most plain vanilla I can say it is this. Everything you or our viewers are spending money on, groceries, utilities, gas, etc., is going up in price. Everything, right? Well, for 20 plus years, that's been happening in our business too. We've been growing, thankfully, but it's continuing, right? Every time we turn around, prices are going up, things are going up, etc. We have a choice to make. I have a choice to make as a business entrepreneur as we continue to grow is, do we ultimately eventually pass those higher prices on to customers? Or do we partner with someone to have economies of scale to not? And after 20 plus years, I do not want to turn around and pass any price increase on to customers. I don't want to do that.
Yeah.
So this makes perfect sense for us as a business. I've gotten a ton of questions already from folks, and that's fine. Nothing changes in our business.
Right.
So we're still Joule Financial. We still have our team in place. We're utilizing Charles Schwab. And probably the number one question I get, Quint, will you still manage the money? Yes, absolutely. Chief Investment Officer, making the management decisions, obviously within our team, in-house for our clients, et cetera. What changes is they're going to help us with operations, our HR, the administrative tasks, costs, et cetera, that we have as we continue to grow. I'm very excited about it. Obviously, now with all the rest of this news going on, it's not something I'm thinking about all that much, but nonetheless, it is something that's happening, and we're excited about it going forward.
Yeah, absolutely. And just to reiterate, everything on the back end, there's a lot of things that we're really excited about as a team, but nothing changes on the front end as far as client-facing. We're going to have the same team in place.
In the state of Kentucky, they'll have to acknowledge our clients, all of our clients will have to acknowledge, yes, if they still want us to be their advisor, which I hope you do, they'll have to acknowledge that anytime that there's an ownership change, they have to acknowledge that they are making an investment in our firm. It's very clear, as I wrote about, they're making an investment in our firm. We will still have ownership in the firm, so it's not, we're not just selling out, moving on. I'm still here, I'm not going anywhere. So just exciting and happy to talk to further people, answer questions about that. So, but shifting gears real quick, I think it's important as we go back, as we come into next week. So this weekend, and hopefully we'll get this out very quickly. You're going to have all weekend. You're going to digest the news. You're going to digest the headlines. And fear sells. It sells. And I will tell you, there's probably nothing more scary than war. And that's going to dominate the headlines. And so I fully anticipate, unless there's something dramatically different that changes over the weekend, I fully anticipate extreme volatility next week. We'll come back to you at the end of the week, and we'll see how things kind of finished out, because often it changes dramatically, and it ends up being a lot better than the beginning. But we are going to watch it. We're going to observe. We're not going to make any knee-jerk emotional decisions or reactions, and we're going to just take it a day at a time. And I think that's how you get through this market, this environment, and really any environment. And the last thing I'll say, and this is it. We're dragging on. But if you're not a client and you're out there and you're going, I don't know what I'm in. I don't know what I have. I don't know if I'm invested in gold. I'm saying that's not a recommendation, but I'm saying, and you need a second opinion, that's why we're here. Give us a ring, drop us an email, set up a Zoom call, come into the office, whatever the case may be. This is the time where you should be hearing from your advisor and knowing what the game plan is. I think that's critical. So.
Absolutely. All right, we're going to close it out. We hope that you all enjoyed us giving constant updates. Make sure that you're reading the newsletters, and we will definitely be in touch more, especially as this plays out.
We'll see you next week.